In the past 2 trading days, wealthy investors are trading Planet Fitness stock, ticker symbol PLNT. And what's unusual about this is that Planet Fitness reports earnings in 2 days, February 22nd, before the market opens. So could they be trading with inside information? Well, we may never know, but we do know what they think will happen to Planet Fitness stock on earnings, whether it goes up or down. So in this video, we will first go over how these wealthy investors are trading Planet Fitness stock, bullish or bearish, and then how we set up an option strategy based on their trade direction so that we can also make money if they are right. So without further ado, let's dive into the data as usual. Today, February 20th, at the last hour, 3:07 p.m., we detected these 1,900 options contracts expiring March 15 for the 67.5 strike calls. And they were paying $285 for each of these options. So a quick calculation of this trade cost, 285 times 1,900 is $541,000. So $500,000 that this investor put into this trade. However, we have to be careful because we can see here on the second, third, fourth line, we have these put options as well. Hundreds of them expiring the same expiration. So we have to take a deeper look at what this could potentially mean. And here on the chain for March 15, we can see these 60 strike puts, 1,200 volume today, much greater than the open interest. So we know that these put options were being bought to open. And by buying these put options, they were paying about $150 for each of these put options. They are essentially hedging their position. You can see this is a short position, which is a negative delta. Okay, so even though that there are these call options that are being bought at the 67.5, that is bullish for 285, we have puts as well. So that is why trading earnings is risky. And so that's something to take into account if you are going to trade it. All right, if you do not want the risk of earnings, then go to our website. We'll put a link at the top here where we share higher probability of profit trades where the wealthy investors are not trading earnings. Okay, so that is why trading earnings is always risky and why we don't position size very much when we do trade earnings. Okay, so the other data point to make note of is actually another day, Friday, February 16. You can see here on this day, for the 67.5 strike calls for the March 15th, we have 4,000 volume on that day. And we know from our analysis that most of these calls were being bought to open. And that would be the same as this call option being bought today, which is bullish. You can see here with a positive delta of 45. Okay, so the majority of these trades are bullish because these puts that they bought for 150, okay, we can see most of these puts for 150, and we saw that there were about 1,200 of them So you can see that 1,200 put options going for 150 is about $180,000. That's much less than the $500,000 today on those call options. And also we had those additional call options being bought on February 16. Okay, so February 16 was actually on this day. This is February 16. And this is today. Okay, so all right, so both of these days, as Planet Fitness was dropping, they were buying these call options. Okay, so we are also going bullish because most of these trades are bullish by buying these call options. And the way we are doing it is setting up this option strategy. It expires the same expiration, March 15, and for each of our trades, we sold the 72.5 strike calls, 2 of them, and then bought 67.5 strike call, 1 of them, and the 75 strike call, 1 of them, so that we have a ratio of 1 to 2 to 1 here. It's a butterfly strategy. And when we analyze the trade, you can see that this is a long bullish trade because we have a positive delta. Okay, and our options trade only costs 110 for each one, whereas the other unusual options, you can see they cost more. And when you take a look at this profit loss diagram, you can see here on the y-axis, this is the profit loss. Anything above is a profit, anything below is a loss. So whenever these purple lines and the blue line, which represents expiration date, purple represents the current date, is below, that is a loss. If it's above, like here, this is a profit. Okay, and on the x-axis we have the share price of Planet Fitness, which currently trades at 65. So you can see as it goes up, this trade becomes profitable. If it goes down, it is a loss. You can max loss, lose at most 110 how much that is being risked, which is 110. But you can see that we are risking less than what we could potentially gain. Okay, so you can see here at this peak profit here, right here at this peak where the blue is at its highest, this profit is all the way near $400 of profit. Okay, that's why it shows up as about $388 of profit at expiration. Okay, so that's a risk to reward ratio that is in our favor, where we can have more gains, win more, 388 in comparison to what we could potentially lose, 110 per trade. Okay, so that is how we want to set up our option strategies, where we have a favorable risk to reward ratio. And that is what we do, not only finding out what the trades of the wealthy investors are getting into, but also using options strategies to maximize our profits while reducing our loss. If you want to learn more about our work, we'll put a link to our website. And let us know in the comments below what you think will happen to Planet Fitness stock on earnings. Do you think it'll drop, or do you think it'll go up? And as usual, subscribe if you haven't, and hit the bell icon, and you will be notified of future unusual options activity. Thank you, and have a great day.